An inflection point has been reached. For the first time since the crash, we closed above the 200-day moving average. That's the average of the stock market over the last 200 days. You know, at the beginning of this time period of the 200 days, we were at consistent all-time highs, all-time highs, all-time highs, all-time highs. Then we get the crash, and we crash right through that 200-day moving average. And we start recovering, and now for the first time, we have broken through that 200-day moving average. And what's the kind of sense I'm getting in this market? It seems like the sellers have sold, and this is a buyer's market, and there's a lot of cash on the sidelines. A lot of people, they took money out of the market when it was crashing. That's when the sellers were taking and getting into cash. And now there's what people call a rotation, which is them turning that cash into equities, turning it back into a buyer's market, coupled with overall economic optimism is a strong driving force that has led to this rally, and I believe will continue it after breaking through the 200-day moving average. There was a lot of questions about whether this 200-day moving average was going to serve as a limit, or if we could get through it, if we could continue another rally. And I'm not a technicals guy. I'm not really about these, resistances to an extent. I do think in some stocks there is a resistance below a certain price. People might have limit orders. But this is somewhat promising that we are now above the 200-day moving average. People see the current prices in the current market as more attractive than it was 200 days ago, even though we're in the midst of a pandemic. And that's because some states are reopening and they're not experiencing a massive spike in cases. This is like Texas and Georgia, which just haven't seen that. New York is falling down significantly. It looks like all of this stimulus has actually worked, and the media is not portraying the Paycheck Protection Program, the PPP, accurately. They're roasting it, say that Trump just wanted to fund the big corporations and do all that. No, a lot of small businesses are alive because of the Paycheck Protection Program. And if you ask me, the biggest problem with paycheck protection is unemployment. The real estate people I've talked to have talked to their businesses, and they're saying, no, they can't get employees because the employees are getting paid more on unemployment. And that, I think, is an actual problem. So it is what it is. We'll see what happens. But it looks like the worst case scenario has been averted, and the market likes that. And I think we're going to come out stronger, and the stimulus is going to serve as a very powerful tailwind for the economy and the markets. I do think the markets will very quickly reach an inflated point. So I would be ready to sell once or take some chips off the table. I'm not saying get out of the market, just take some chips off the table. Once you start hearing me say the phrase, valuations are inflated. Right now, I believe valuations are fair. When I say valuations are inflated, I'm telling you now, maybe start selling in things that you think are at a good price to sell and buying into some value if you see some value. And I think we're just going to start heading in that direction of progress and optimism, and buyers and, the sellers have sold. So I don't think anybody is going to really be looking to sell until valuations get really high. And I'm not saying this rally is going to continue. Today was pretty aggressive. Days like today, it wasn't too aggressive, though. It was pretty aggressive. But they don't come around that often. So tomorrow we might pull back. We take the stairs on the way up. So it's still going to be a staircase ride up. But that's how the market rolls. So growth has been the leader. If you look at stocks like CRISPR, like Upwork even, stocks that may not be profitable but pose good growth potential, those have been the stocks that have been outperforming the market significantly. But a lot of those stocks have reached pretty good valuations. Like CRISPR is pretty close to an all-time high, over a $4 billion valuation right now. So it was down today, not because anything bad came out about CRISPR, but just because people were seeing other areas of the market rally, like cruise lines, like air travel, like banks, And they wanted to take money out of the riskier, more growth companies that have seen their gains and realize those gains and take those chips off the table and deploy them or rotate those funds into areas that are more cyclical, that are presenting, dare I say it, better value right now. Better value. CRISPR, I think, is, fair value, pretty expensive. I'm not selling any, but I'm holding it long term. I'm actually adding to it. But it's less attractive at these levels than it was when it was $30 a share, let me tell you. So that's the theme of the market. It's looking for value, and, we're kind of getting late in this value finding. I think valuations are fair. I'm a buyer right now, but I'm not an aggressive buyer. I'm not super excited about buying. It's not like things are super attractive to me. Warren Buffett didn't even see anything attractive at the bottom, allegedly. So what he thought then and what he said he thought then is kind of what I'm seeing now. There's a couple things that I'm like, yeah, I'm still buying that. And I'm still buying. I'm not selling. I'm just not excited about buying. I'm not, the market's not opening. And I'm like, God, I don't have any fear of missing out. I have no fear of missing out right now. So, no fear of missing out. So, with that said, I think it's crazy, but we could reach all-time highs with a good reopening and strong stimulus, which Mitch McConnell says will be coming yet again. So, my economic forecast is pretty good. Obviously, there's some scarring, but the country has gone through worse. We've gone through World War II, the Spanish flu. There's the Great Recession. There's been that was questioning the entire financial system. So, and we were just at all-time highs, valuations maybe 2 times as high as they were then. So, at the highs before the recession. So, let's just be long-term optimistic, and let's acknowledge that there are long-term fears, and I may cover those in the next video. But if you just to satisfy your intrigue, I'd say there's been a lot of printing of money. I would look to add a little bit of gold, and I would look to add a little bit of Bitcoin, because it's very finite. And I think people in Africa will love Bitcoin. They struggle with payment processing there. Bitcoin is very attractive to people in Africa. The next, maybe behind India, emerging market. Obviously, Africa's large, whatever. So consider the risks. There are risks associated with all of the debt we've taken on and all of the money we've printed. And a lot of those have to do with inflation. So, until next time, peace.